BlackRock and Coinbase rumor about the manipulation of Bitcoin. And this is kind of something that we've talked about in the past, something that I've mentioned before, and something that may or may not be true. So the interesting thing about it is when we talk about crypto, we always talk about verifying before trusting. In addition to that, we want to take responsibility for our own actions. We want to do our due diligence, and we don't really just want to trust people, especially in crypto, especially in any aspect of life. Primarily because I don't know about you guys, but I was raised that, you have to build trust with someone. And crypto essentially embodies that. More importantly, Bitcoin, because you can verify things on chain, which is really, really, really important. And we talk a lot about, crypto being the wild, wild west and whatnot. And again, when we're talking about crypto being the wild, wild west, there's a lot of opportunities to make money, and there's also a lot of opportunities to lose money. And the way that you can potentially get a lot of money is by verifying, double checking, doing due diligence, doing all of those things, and not just acting on impulses. So we're going to talk about like the rumors and the drama that happened over the weekend. And we're going to, talk about different scenarios that could potentially happen. One of the things I've said many, many times is with the BlackRock ETFs or with the Bitcoin spot ETFs, that there's really no need for them. When you're talking about an asset like Bitcoin, you don't need a big traditional financial entity to come in to offer this product because we can buy it on our own. I can go to any crypto exchange and buy Bitcoin. I can go do a P2P transaction with somebody on the internet, which again, I'm not recommending. I'm just simply saying we can create our own transactions. If we want to buy Bitcoin, if we want to hold Bitcoin, if we want to invest, if we want to trade, whatever it is we want to do, we can do that on our own. We don't need these big entities. And it was always super interesting to me to see people cheering about BlackRock and these big TradFi entities coming into crypto, coming into Bitcoin, because they seem to care about adoption and price pumps and this and that. And that's great. That's fine. That's fantastic. I will grow ethically alongside all of you as well, because I want to make money too. But at the same time, it really, really defeats the ethos of Bitcoin. Because you think about Bitcoin, Bitcoin was created for the people, by the people, so that we can remove the middleman, to remove the banks, the predatory traditional financial entities. If you guys lived through 2008, most of you know what I'm talking about. And we're seeing, our industry essentially get swallowed whole. And there's now questions about transparency of Coinbase and BlackRock and Bitcoin and all of that because we're the proof of reserves. The interesting thing about crypto is that there's this thing called proof of reserves. It's called on-chain activity. And when we're talking about on-chain activity, you can verify things. You can verify anything on-chain. And with TradFi, you can't because they keep things private. Yes, they release earnings reports and they release this and they follow this SEC guidelines and this from the CFTC and all of these different things, legal things. But it would be really cool to be able to track every single thing that's done on chain by the big banks, by the public servants, by the government, so we can see where they're spending our taxpayer dollars, what they're doing with our money. Because again, when we talk about the crypto contagion, part of what happened is the crypto entities, these crypto exchanges were acting like banks. They says, hey, deposit your money. We'll give you a little bit of interest back. Then they took our money and invested it elsewhere to make more money and then pay us a percentage of that interest. That's what banks do. Why do you think they give you interest? And over time, the interest from the banks has been less and less and less and less, and that's fine because, their bottom line. But at the same time, like we crypto, because we want that transparency. We want to be able to see what's happening, So it's just very interesting to see the shift now. The safest way to hold Bitcoin is crypto is self-custody. And this is an unpopular opinion, but I'm going to say it too. I don't think we're going to see true mass adoption until the banks actually are able to custody crypto for us and have some sort of insurance on it, just in case something happens or we lose it. Because most people don't want to be that responsible for themselves and their assets. Think about it this way. Would you walk around holding a bag of $10,000, $100,000, $25,000? Let's say you bought a house that's worth $400,000. Would you walk around with cash with that house? You wouldn't. No one wants that responsibility. And that's okay. It's okay to admit that. I'm like on the fence. Like sometimes I want help and other times I don't want help. So let's go ahead and get into the drama and talk about it. I've got a cold. Because, man, even though Lo wasn't here this weekend, I got a cold. Probably because the weather is so bad outside. All the fires, it is absolutely horrible. And it's always funny to me, Mr. Newsom like parades himself around, like talking about all these other issues when California is literally burning. Let's go ahead and get into it, though. All right. So this account over here, oh, he deleted it. So basically what he was saying before he deleted it was, where are the proof of reserves for Bitcoin and BlackRock and Coinbase? Because, you know, Coinbase is a custodian. So he was questioning, and he should question. He absolutely should. And I agree with him here. Account is Tyler Durden. And I agree. So basically, there's rumors circulating that Coinbase is writing Bitcoin IOUs for BlackRock, and they are suppressing price. People say that BlackRock ETF purchases are not on-chain and were designed to manipulate Bitcoin. In a tweet, Armstrong explained how the ETF process works and also addressed concerns about transparency and custody of Bitcoin, CBDC. The key points here: ETF mints and burns are settled on-chain, but institutional clients use trading, financing, OTC options before final settlement on-chain. And again, a lot of high-value transactions, people like to do OTC because it's more private. It's more private, and you save on fees. There's negotiation. There's all different. There are all different things that take place when you do where you settle on-chain when you do OTC stuff. You know, it makes sense. Again, remember Crypto Space, San Pedro? They did OTC stuff. Some of the exchanges, when you have a lot of capital, they will do OTC for you. Audits are conducted annually. Institutional clients' addresses are kept private, as it's not the company's role to share them. And that was a big issue, was trying to figure out what these addresses are, how much money is there, and then compare it to market cap and to other public things we know. But Brian Armstrong does bring up a good point. Institutional clients' addresses are kept private. It's not the company's role to share them. So that's kind of contradictory of the true ethos of Bitcoin. Because remember, crypto, we want everything to be public. We want everything to be, well, not necessarily public, but we want everything to be transparent. He also says that Deloitte audits us annually. We're a public company. Doubt our institutional clients want dusting of their addresses. What is dusting? What is dusting? So dusting, I had my public address out there, wendyO.eth. You guys could go search it. It's there. Always will be there. And I got dusted. I got sent with a tornado. Someone sent me and a bunch of other people that had last cycle that had their Ethereum addresses public. They sent a transaction form Tornado Cash because you have to report it to OFAC, all kinds of stuff. They just did it to be jerks, and they did it to a lot of people. Like pretty much anybody that had a large audience or a large following on Twitter or whatever, they just did it. Like I think they did it to Jimmy Fallon, a bunch of people. It was like ridiculous, silly. So that's what he's talking about. He doesn't want clients' addresses to get dusted, and that's honestly a true thing because people in the crypto industry are absolutely animals. You guys are really immature, so I don't blame them. Also, too, there's rumors of Lazarus trying to hack some of these traditional financial institutions. So they want to keep things private, which I get to an extent because that does become dangerous when you're holding that much capital. I get it 100%. But at the same time, it's directly contradictory to crypto, to Bitcoin's ethos. Because we want to be able to track this stuff. And again, Armstrong acknowledges that it's essentially custodian, meaning the underlying Bitcoin is stored in a centralized entity, and they have never claimed otherwise. Which again, that makes sense because we're talking about big institutional clients. So this is becoming a hot topic in crypto. People are like, why is this happening? Those are Brian Armstrong's answers. Now, should you trust Coinbase? You shouldn't trust anyone. You shouldn't trust me. I tell you guys that all the time. You shouldn't trust anybody. Don't trust people on the internet. Don't trust crypto exchanges. If you've got crypto on an exchange, you shouldn't. You should have it on chain. Again, there's lots of cold storage devices, Ledger, Trezor, Arculus, Tangent. If you can't afford those, you can get an old throwaway phone that's completely disconnected from the internet. Download Phantom Wallet, MetaMask, or Trust Wallet. Secure your keys. You could do it that way. Paper wallets are secure. But you should be doing everything like on DEXs now. Because with the crypto exchanges, they're cracking down, and they are cracking down hard. You cannot, you can't send a P2P transaction on a centralized crypto exchange. They'll shut your account down. And they're blaming this on the crypto contagion, which the crypto contagion, and I'm not defending any of these people that ran these companies or did these heinous things, but they basically did exactly what banks were doing, what banks do, and they got caught. They were just over leveraged, which the whole FTX thing, the whole FTX looting thing, I think a lot of that was pre-planned. That's just my personal opinion. I don't really have any evidence to back it. It's just kind of my gut, what I feel. But again, just because I think that doesn't mean that it's the truth. And I understand Brian Armstrong's side here, but at the same time, I understand the crypto community wanting transparency to see, because that's why people are like, oh my God, this is great. We'll be able to track these. No, you won't. Why would they want you to track anything? Why would they want to give you information about their bottom line and what they're doing and how they're running their business? Why would they want to share it with a poor person? They think you're stupid and poor. That's what retail means. I need to come up with an acronym for retail. What does retail mean? Poor and stupid. So let's go ahead and read some other takes here about this. This is Brian Armstrong. He clapped back. And of course, Udi had to be a dork. Hey, Brian, any tips for dealing with hair loss? I'm looking for reliable ways to expedite it. High testosterone. Because again, Brian Armstrong, he's bald, which no shame in that at any way, shape, or form. I think some men are very attractive. They look more attractive bald. That's just me. And there's a particular man that I think looks very, very attractive bald, but I'm not going to say who it is or what group it is. But if you know, you know. But let's get into this take over here. So Mr. Nate, he is the president of the ETF store. All kinds of stuff, Mr. ETF person. He says, whatever Coinbase is or isn't doing, rest assured the ETFs are 100% own underlying Bitcoin. It's real and it's spectacular. That's simple, period, end of story. Heard some things back in the day with physical gold ETFs. Anyone perpetuating this stuff doesn't understand how ETF works. So I understand that he's coming out and saying this. He's the old school ETF guy. But at the same time, I understand the crypto company's issue. Because I'm curious too. I want to be able to track this stuff. I want to know what's going on. I want to know. I want you guys to be able to see. But at the same time, security is a big factor, because Coinbase is probably like Coinbase, Kraken, Gemini, maybe a couple others are literally going to be the last one standing. Coinbase is the chosen one. They've always had that TradFi aspect. Coinbase has never been an exchange that they've always been about the money, about the bottom line, extremely professional. Yes, their customer service is got problems. Everyone in crypto says that. And there's really no excuse for that when you've got that much, when you're that big of an exchange. There's ways to do that. But again, people that are in tech, they don't understand the importance of social skills, and they don't understand the importance of customer service. You'll see this with big pharma too. You'll see this in healthcare now. But a lot of these big corporations, they don't care about customer service, and customer service is important. But Coinbase is the chosen one. They've had partnerships with ICE. They have partnerships with all the confiscated crypto from the public servants, and they liquidate those holdings for them. They've always been essentially the chosen one, and it's because they've acted a lot more professional than others in the industry. This is my personal opinion. And this is the thing. Should you trust Coinbase? No, never. No way, shape, or form. But right now, this is a big topic. And is BlackRock infiltrating its way into crypto? And do they have good intentions? I don't think they do. Why would they? These are the same company. The BlackRock is the same company that's buying up all the properties in America, making it next to impossible for middle class, lower middle class, and upper middle class to buy. They're TradFi. TradFi is always the enemy and will be the enemy. Do we need TradFi? Yes. Can we create our own financial systems? Yes, but they won't let us. Look at Caitlin Long and what she's trying to do. So, we just kind of have to trust that Coinbase is doing the right thing, which I don't trust them. I would still be concerned. And that's why you should really, really figure out that you don't want to leave crypto assets on exchanges. It's never been a good idea to do that. We've never done that. We've done it, but with moon bags and stuff that we were okay with losing. But there's one more piece here that we got to go over. And then this over here from Mr. Eric B. He is another ETF person. So he says, people keep asking me if I believe him. Yes, I do. Mostly because BlackRock isn't playing around, folks. They would flip out if Coin was screwing around with their Bitcoin. Plus, it would violate Act 33. The reason this theory is twofold. Bitcoiners looking for scapegoat to blame for selling pressure instead of looking in the mirror. It must be the ETFs, but all they've done is saved your bag, sliding into oblivion multiple times. People who invest in Bitcoin generally are skeptical of government institutions. No, they're not. They loved it. They were on their knees begging for the BlackRock spot ETF. Which the whole Bitcoin thing is just ridiculous. Like, the whole Bitcoiner, toxic Bitcoin, whatever, is just ridiculous and stupid. So that's what's going on. People are saying that, Coinbase isn't being honest. And then Tyler, he posted this. He says, what does one-of-one proof of Bitcoin reserves look like? And this is President Vitalik. He posted this back on March 15th, 2024. We decided to transfer a big chunk of our Bitcoin in a cold wallet and store that cold wallet in a physical vault within our national territory. So basically, he's publicly posting the address for the Bitcoin that El Salvador has accumulated. Coinbase has not done that. And again, when the whole crypto contagion thing was happening, that was a good time for all the exchanges to do that, even though they weren't required by law. So Coinbase is just doing is just doing the bare minimum required by law. And who wants to blame them for that? If they don't have to, why would they? And again, El Salvador is run a lot differently than America for different obvious reasons. There's a lot to hide in America. So that's what's going on with the whole Bitcoin BlackRock thing. Do I trust Coinbase and BlackRock? No way, shape, or form. Will I use Coinbase? Yeah, I'll use it as an off-ramp. Why not? Do I think Coinbase is going to be the crypto bank of America? And do I think Circle is going to usher in the CBDC with the USDC? Yes, I do. Now let's get into this about El Salvador, since we're giving flowers to El Salvador. So Mr. Vitalik just announced El Salvador will achieve fiscal independence starting with the 2025 budget. This means no more debt. While America, what are we at, $36 trillion worth of debt? They want to increase taxes. They want to continue to do so on rich people. And this is the thing, you guys. I don't like taxes. Taxes are a necessary evil. I think taxes are a scam. I don't want to pay them. We do. We pay them every year. Getting ready to pay 2024, get my estimated amount. But at the same time, they're needed for certain things to pay for housing programs and roads and schools and all that stuff. My issue with taxes is we're not able to balance our budget. And people get mad at me when I say that. But this is the thing. I live in Los Angeles County. We have a very high tax rate in Los Angeles, California, very high in California in general. And the fact that there's still schools that are not 10 out of 10 in California, with the amount of taxpayer dollars we rake in, atrocious. You know what? You want to tax the rich people? Cool. Tax the rich people. But before you tax the rich people and before you increase taxes on anybody, make sure the schools are 10 out of 10. Roads, we need new roads. Yeah, we can work on the roads, but guess what? Our kids matter. They should come first. So until my babies in all neighborhoods and all sets are getting a 10 out of 10 education, or it's available to them, no more tax increases. Because where's the money going? It's not going to our kids. And that's all that I want to say. And if you disagree with me, totally fine. I don't expect everyone to agree with me, but that's just my thought process. I don't want anyone paying more money because the money's not going where it's supposed to go. So you rob Peter to pay Paul, but you rob this rich person to pay this elitist or this ivory tower, because that's what it is. They're both ivory towers, public servants and rich people. And again, not all rich people are bad at all. I'm just trying to make a point here. I digress. So shout out to El Salvador. El Salvador might be the move if we don't get a pro-crypto president. Smash a like, push this out. Also, too, we got some meme coin drama we're going to be talking about. Oh boy. So stick around. The show's getting hot. We have 269 viewers and then about 100 of you on TikTok. Woo. Shout out to our members of the channel, to Queen, to Mixing, to Raider, to Legend, to John, to Mo, to Mr. R, to Alexandra, to all of the amazing people. We also have a poll at the top. Do you trust Coinbase? 47% of you say yes. 53% say no. Should not be trusting anyone, guys. Trust yourself. Now let's get into this story. Why 3 U.S. economic events and how they could impact the crypto markets. And again, I've got a cold. I apologize. Key U.S. macroeconomic events this week could affect Bitcoin's range-bound trading between 60 to 57,000. We'll get into price action right after this. Retail sales. FOMC meeting, interest rate decision, unemployment claims may drive volatility in crypto markets. Plus, China's policies also influence Bitcoin with potential price fluctuations tied to economic intervention. Also, this week is Token 2049. I'll get to that in a little bit. But there's also a big rumor that Democratic senators are now urging the Fed to cut rates by 75 BPS on Wednesday. First, it was 25, and then it was 50, and now it's 75. So that's a pretty big cut with rates. Will it destroy the economy? No, but it's going to cause a lot of volatility. Now, should they lower rates? They can do whatever they want with rates. But it still doesn't change the fact your purchasing power with your dollar. And it also doesn't bring down the cost of goods and services. It doesn't make jobs. And I guess the unemployment rates, what they're talking, the information they're giving you, no. I don't believe it. Now let's go ahead and get into the crypto markets because we got a lot of meme coin stuff happening. But that's what's happening. We'll see what happens with the FOMOC meeting. I believe it's Wednesday. See what happens with that. But again, I'm not feeling very hopeful at all. It's just very unfortunate what's happening in America. And yes, we are in a recession. Get mad or say the reports, this, that, whatever. Go to the hood and then come talk to me. Or just go in a middle class neighborhood and come talk to me. All right. So this is the crypto market cap right now. This is crypto bubbles. I'm going to go ahead and remove myself. There we go. Woo. All right. Okay. So this is the daily. Everything is in the red. And on the weekly, it looks like Nervous. This is something we've talked about on the channel for a while. Up at 75.2%. Sui, Ohm, Phantom, those are up. And let's take a look at what's going on with Bitcoin. So this is Bitcoin over here. I did a little mini video for you guys yesterday. So we got that close above 57, which I thought, 57, which was great. We closed at, actually, let's go to do a naked chart over here so y'all could see. All right, market ciphers getting ready to curl. Nice bullish up here. All right, so last week Bitcoin opened at 54.5. We closed at 59,000. We did get a swing with high to $60,000. So I just really wanted to get that close. Like me personally, last week I wanted to get a close above. I wanted to get a close above here at like the $60,000 mark, primarily because I wanted no more lower highs. I think that's what it is. I always get them so confused because yes, we're technically in a really bad downtrend, but we weren't able to close above that swing wick high at like $60,000. Instead, we closed over here at about 59 and now we're dropping. People are like freaking out about it, which I don't know why, because it's literally not that bad. I'm back again. So we're getting ready to retest 57 and possibly 55. Taking a look at the 4 hour. 4 hours kind of holding on. So we popped up and then we got that nice drop down. So 57 and 56. But taking a look over here at this chart, I like this chart over here. We'll see what happens with this line if we break 57, like the $57,000 area. That's a pretty key area over here. So a lot of people are freaking out because of all the, of all the red. So we'll see what happens if we break down. If we do get that breakdown, I'd look to about 55. But again, even if we do consolidate in this area, about 57 to 53, that doesn't make me bearish. We need a little bit of a correction. But really, if we do zoom out, we are in a downtrend. The markets are not looking super great. Let's go ahead and draw a little bit of a line. We would really kind of need to get a break above like the 60,000 and sustain for me to be like super bullish right now. I'm still super bullish long term, but short term I'm a little bit bearish and that's okay. And then as far as Ethereum goes, Ethereum is just not looking good at all. A lot of people are worried. A lot of people are nervous, and we might actually get a drop to about $1,500 because we don't, after this area of $2,100, we don't really have a lot of support. Yeah, we've got 19, we've got 17, but really bottomed out is about $1,500. Bullish scenario for Ethereum would be for us to break above this trend line here on the daily and do something like this. I don't know if that's going to happen. We'll have to see. And right now, the entire crypto market cap is under $2 trillion. Bitcoin dominance is increasing like freaking crazy. Absolutely crazy. It's over 60%. I think it's close to 60% dominance. Super, super close. Also, too, we got a red dot printed. Everything is dropping in crypto altcoins. Solana is actually holding up really well, considering. Looks like we may, fall back down, break 127, fall back down to like 120. So there's that. But now let's get into some of the drama. Win God candle, hopefully soon. Make sure to smash like and share this, guys. So let's get into this. This is Degods. This is from Miss Erica Lee. So let's read. Breaking. Degod announced Degod coin after Frank Degods said he had nothing planned for the future except vibes in the last interview. You'll be able to convert Degod through sweeping and burning Degods, Utes, or dust. So these are NFT 404s. If you have, you can swap your Degod for 550,000 Degod. Your Utes, 120,000, you can burn it, and dust, 36 dust for, I guess, whatever. I don't know. Anyways, I have a Ute, so I'm covering this. She's got a little thing over here. What happens to the NFT after you burn it? Degods will enter a floor price on Sniper. You can buy the Degod in this pool with Soul Degod or even swapping for another as payment. Every Degod in the pool will be dynamically repriced on the price of Degod. Utes and dust are burned, so it's basically burned. I don't want my Ute. It was like the biggest ridiculous ever. And okay, and this is the thing. So a lot of people are pissed off about this. But again, I don't think it's like too terribly crazy. They're just trying different things out to see what works. And now I remember Utes and Degods, they merged off Solana and then to Polygon, then to Ethereum. Now they're back on Solana. I'm pretty sure. I don't know. I've merged it somewhere, or moved on and off chain or wherever the hell so many times. The NFTs that will be transformed into a new form called Degods, and the development is intended to simplify and enhance utility digital assets for the D-Labs community. Basically, what they want to do is they just want to have more holders, because if you get a Degod or you have the Degod token, then you can be part of the cool group, which that's really what NFTs have turned into. Cool, fine, fantastic. Does this add any value to me? No. Am I hating on them for what they're doing? No. Do I care? Not really. I know this is the thing. When I invest in something, I know most of these things are experiments. I know most of these things will go to zero. I know most of them will not sustain. And if they do happen to sustain, cool, I've done well. So we'll see what happens with the coin. I haven't decided what I'm going to do yet. But I don't like my Ute. It's ugly. All right, now let's talk about CATE, because they did something really cool. So this story is actually very interesting, the way they went about it. So way back in 2020, 2021, you guys remember a lot of crypto projects that are sending, because Vitalik.eth, that's his public address, they would send a certain amount of a supply to Vitalik. He would dump the supply and then, take the funds and donate it. So what CATE on Ethereum did, which was pretty unique and different, and yes, I am invested in this now. But what they did is they donated $100,000 of USDT to Vitalik.eth and says, we'd love for you to choose a charity that can honor Doge's legacy in the best way possible, celebrate Doge spirit by giving back and making a difference. And they posted the transaction. So that's a great way to showcase on-chain transactions and transparency. I think this is super cool. I don't know where the money came from. Probably they took profit, whatever, which is totally fine. But again, you guys remember Doge. The poor Doji, he passed away from old age. But this is really cool. I just kind of wanted to highlight it because I thought it was super cool. This is a great way to, what they did is they moved out the bias. And they sent the tether. And by sending tether, this is just showing, hey, go ahead, hey, this is to me, this is a very clean, this is a great marketing tactic. I absolutely love it. Give me 14 of them. Not doing a crazy fancy party in Singapore. Well, I don't know if they are or not, but this is a really cool marketing tactic. It's not impacting price in a negative way. It's putting their name out there. People are talking about it. They're marketing. I love it. I think it's a beautiful thing. If Vitalik could donate it to whatever charity he wants, good for him. Delicious. For today, I'm making bean soup because I've got a little bit of a sicky sick. All right, let's go ahead and get into the next piece of the story stuff over here. Talk about Binance, because there's some drama with Binance. So Binance will list Nero ETH-CTO, Turbo token, which is a TikTok token. You guys love Turbo, and Baby Doge coin, which I think that they should list Squid Grow. In my personal opinion, I think Squid Grow is should have been listed, and Baby Doge has been around since as long as Squid Grow. No shade to Baby Doge, but good for them, happy for them. But they need to list some Squid Grow and Silent Swap. Shout out. But of course, Leonardus from Dogcoin says listing a $15 million corporate market cap coin like Nero is a slap in the face to every organic meme coin community. Doge achieved a $980 million market cap organically, has still not been listed on Binance. Why? Fair. I do hold Dog. So that's pretty, it's a pretty interesting thing. And again, these are like small cap stuff, you guys. Plus, there's some drama with Nero too. Like, what's going on? Yeah, let me read this. So Binance, okay. there's two different Nero tokens. There's one for spot, one for futures. Community criticized the decision. The original Nero pumped 70% on the, or 700% on the announcement. Nero is a Shiba Inu pup owned by the same person whose pet dog Caboso inspired Dogecoin. So it's just cuckoo. There's all these different Neros. I know Raider knows which one. I'm like not following this too much, but there's like a Nero on Sol, a Nero on ETH, and all kinds of stuff. So I don't know. Good for them. Happy for them. And since we are talking about Binance, I'm going to give a big shout out to ZZ. He's out in the LBC in a halfway house. Well, he's scheduled for release September 29th, according to the Federal Bureau of Prisons website. You can go check that out. I made a post and I was actually kind of curious. Have any of you guys put money on his books? Have you guys put money on his books? I think you can. I don't know how that works anymore. You used to have to go in person, but I think you do it all online. So anyways, there's that. So we'll see what happens. And I said, just in time for October, because they say September is a historical awful month for Bitcoin and crypto. But now apparently October is a good month. So we'll see. We'll have to kind of see what happens. All right, I'm going to disappear for a second. We're going to get to the next story. For our partners of the show today, which is going to be DeFi Tech, bridging TradFi with innovative exposure to digital assets. And again, we are partnered with them for today's show, DeFi Technologies. And again, thank you to you guys for sponsoring the show. So DeFi Technologies bridges traditional financial and digital assets, offering institutional grade exposure through exchange traded products, ETPs, trading, and Web3 infrastructure. With DeFi Technologies, you can easily invest in digital assets without the hassle of managing crypto wallets. They are a publicly traded company providing secure, regulated access to the digital asset space, making it simple for traditional investors. Their recent quarter to 2024 results were record-breaking with $98 million in revenue and $66.5 million in net income, thanks to their 100% owned Valor, which leads the European crypto ETP market, earning 8 to 10% on assets. Plus, their arbitrage trading desk added $97 million in just a few months. With a PE ratio of just 3 projected $131 million in 2024 revenues, DeFi Technologies is one to watch. If you're interested, learn more at DeFi Tech. And as always, do your own research or consult a financial advisor. The links are going to be down below. If you're interested, check them out, join the communities, ask questions, follow them on Twitter. And again, thank you so much to DeFi Technologies for partnering with us for the show today. Thank you. Now, let's get into some more drama. The SEC, Mr. Deaton. SEC's crypto overreach has cost retail investors $15 billion, claims John Deaton. If you guys don't know, John Deaton is a friend of the O Show. He's been on the channel. I hosted an event for him with Scott Melker and some other folks. He is running against Elizabeth Warren in Massachusetts. If you want to support John, you can donate. If you can't donate money, donate your time. If you cannot donate your time, share things on social media. Like this video, clip this, go support him, follow him, repost things. That's how you support people. But I believe him. I believe over here when he says this. So let's go ahead and read a little bit more about what he's saying here. And basically he's saying the SEC's caused over $15 billion in losses for retail investors due to regulatory overreach, because remember, the SEC likes to litigate instead of do their job. He criticized Warren for not holding the SEC accountable, and he should, because she's atrocious. Absolutely atrocious. And says that crypto's for bad people. But what she's doing by saying crypto's for bad people, she's insulting hardworking Americans that are just trying to earn additional income ethically and legally as possible so that they can take care of their families, because the economy is in absolute shambles. The SEC recently clarified that cryptocurrency should not be classified as securities, reversing its previous stance because they had that term crypto asset security. Deaton wasn't satisfied with the SEC's apology, stating the agency's action have caused significant harm to retail investors. And Deaton knows, because Deaton was actually out there in the trenches, out there representing, I think, 50,000 or 75,000 XRP holders on a global scale, because the SEC went after Ripple. So again, we want to support people like this. Do your research on them and support them. All right, I got a couple other things to talk to you about. This next thing over here, I'm not going to token 2049 in Singapore this year. I'm not. But Chain Fusion Hub ICP, they have a really cool event, and I believe it is on the I want to say it's the 19th and the 19th and 20th. So if you guys are going to be there, check out what they're doing. It's at the Fullerton Hotel. But again, I won't be at Singapore 2049 this year. It just didn't. I had some personal things I had to take care of, but it's going to be a cool event. Anything ICP is doing is worth taking note of. So it'll be super fun, I'm sure. There's a lot of other really cool events happening. I think that they're doing a killer whales thing. I won't be there, but make sure you guys check that out, all of that stuff. Shout out to my castmates over at Killer Whales and all the projects that pitched in front of us. But again, ICP is doing their thing. So, and I think they might be streaming this. So if you're, I don't know 100% sure. I wouldn't be surprised if they were streaming it. And make sure to check it out and just follow them in general if you're a big ICP fan. Oh, it's not a season of Killer Whales. They do these little side events, and I just wasn't able to come. But again, if you're an ICP person, check it out. And then let's go ahead and talk about this last story over here with Liberty Finance, World Liberty Finance with Mr. Trump. And make sure you guys smash a like and share this. Also, too, thank you so much to the Real G Squad for the $2 super chat. I appreciate you. Best cold wallet. I don't know. Ledger, Trezor, Arculus, Tantrum. That's what people like. But let's talk a little bit about Trump's financial liberty, whatever the hell it is. So basically, he's going to do X Space today, I think, with Rug Radio. So shout out to them. Trump is going to announce the launch of World Liberty Finance on Spaces at 8 p.m. ET today. Sandy Peng, co-founder of Ethereum Layer 2 network Scroll, has joined as the project advisor. Scroll ranks among 6 a month Ethereum Layer 2s by TVL, which is silly. So she'll be there. I think this whole project, the timing of launching it is ridiculous right now, considering what's happening in America. And you all know the drama that happened yesterday. Former President Trump is safe, so amen. But other than that, I don't know if I'm even going to listen to the space because, again, it's a centralized DeFi platform. I don't like the token allocation. There's lots of things I've got an issue with. But anyways. Thank you guys so much for watching. My throat is getting a little cuckoo. I got to go take more shots of honey. Sending you guys love and light. Thank you so much for watching the channels. Thank you to DeFi Technologies. Shout out to Squid Grow, Silent Swap. Also, Squid Grow team is going to be in Singapore. Make sure you guys say hi to them. Shout out to Market Cypher. All of that. Yourmom.com. Love you guys. Appreciate you guys. Bye. Oh, and I've got a video for 3:30 p.m. PST, 3 o'clock p.m. PST coming. I don't know what it's going to be about yet, but I appreciate you guys. Thank you. Woo! Oh, this thing is not working.